Hey guys, Steve here from theturtlefollower.com with the weekend update for Saturday, November 1st, 2014. Hope everyone had a happy and safe Halloween. We took the kids out, so everybody was kind of recovering today from their sugar highs yesterday. But as far as the market goes, I mean, we couldn't ask for a better end of the month. The beginning of the month looked real down. Looked like we may be reversing trend. And then sure enough, by the time the end of the month comes along, we're pushing new highs. So pretty amazing rally from pretty much the middle of October on. And with that rally, we've added, I think it's been in the last 2 weeks, I think we've added 10 positions right there where I've highlighted from the 21st on. So in the last 10 days, you can see, or 11 days, you can see what we've added. All right, Limited Brands, Ross Stores, Travelers, Apple, Chubb, Ace, Nike, Lockheed Martin, Simon Property Group, and CTAS. So we've added a lot of risk to the portfolio. We've also, you can see here, our allocation now is 112%. So we're using 12% of our margin allotted to us, which is fine, not a big deal. Open profit right now, $2,700. Open risk, $10,000. And you can see the closed win ratio and average R still negative, but that's not surprising considering what we've been through in the last, or at least I should say in the beginning of October, that where we exit a lot of positions. So the fact that average closed R is under 0.2 R, I'm perfectly fine with that. As we start moving on, we should hopefully be closing out some positions for profit, and then we'll be able to reverse this trend. If you were to use what we have now and you averaged it, we're actually positive. All right, so we're actually 0.03 R if we were to close everything out as is right now. So you can see again, discretionary financial staples are the main allocations in the portfolio, 4 in each of the discretionary financials and 3 in staples. Lockheed Martin, CTAS in the industrial section or sector, and technology, Apple. You can make the argument Apple probably could go in the discretionary category as well, but it's technically listed as a technology stock. So as far as performance goes, I actually missed last week. I don't know why I missed it, but you can see here from the beginning of October to where we are now, we're actually only down $2,000. So again, for as bad as the month was in the beginning, we've really recovered a lot of it towards the end. But one thing I want to point out is this is the first week, again, I'm not sure what happened last week, but right now this is the first week where the S&P is now outperforming our portfolio, which if you think about it in a logical sense, it makes more sense that it would, only for the reason that using the S&P, that assumes you're 100% invested all the time, and there's no commissions, there's no nothing. So there's a lot of other things that go into it. So using the S&P, it's a benchmark I like to stick to, but if we do not outperform the S&P, I'm perfectly fine with that, because this is in a perfect world scenario that, we would now be back over 1.75% of a gain from when we started. And again, that just assumes that you're invested 100% of the time, 100% of your money. Obviously we don't do that. We've pared down our position or our portfolio size since the beginning of October. Now we're starting to build it back up, assuming and anticipating hopefully a run to new highs in most of the indices. The S&P actually did hit a high on Friday. So that's how the portfolio is shaping up. Again, positions, everything looks great. Right now we have 13 of 14 positions in the green. That's what you like to see. So now the idea here is just let these stocks work. We've done the hard part. We've entered the stock. We found the stocks we want. Now it's time to let them do their job, let them work, and let them return some capital for us. So as we go through the position review, you're going to see that a lot of my commentary is going to be the same. Let the stocks work, at new highs, let the stocks work, and that's how you want to really look for that outperformance. So actually, by doing less, you're actually doing more and letting your positions run. So let's get over and look at our positions and look at the markets real quick. All right, so here's the S&P futures. All right, we'll go through each of these real quick. But you can see here the high from back in the middle of September was 2014.50. On Friday, we hit a high of 2016.75. Sure enough, we closed off those highs a little bit, but not much. We ended up closing right around 2009.25, so down about 5 points. But technically, all-time closing highs, we have hit that level. All right. I do foresee some type of resistance, some type of consolidation happening. Maybe it's this week, maybe it's next week. I just can't really see this market going straight through resistance. Not that it can't happen. I've gone over a couple stocks that is the pattern that's played out, where it's broken down to new lows and rallied straight through to new highs. So nothing saying that the market can't do the same. When you actually break it down, you look at it just as any other stock. All right, so if it does do that, that's fine. I mean, not that it's not doable, but it's just not the type of pattern that you would expect to see. All right, so right now, pretty much blue sky territory ahead, but I just see it consolidating between where we closed on Friday and maybe this 1970 level. All right, the NASDAQ/NQ futures. You can see this one broke out 2 new highs. All right, so again, not saying it can't happen, but I would just, I guess, feel more comfortable if it had consolidated a little bit at some point during this run. You know, as good as this run looks, it's very similar to the trade we had in LUV, where there was very little support on the way down, and that's kind of the one thing I'm concerned about here. You know, if this were to reverse on us, where do you actually consider there to be support? So, but the NASDAQ, you could see it broke this downtrend line. And we talked about this. We talked about, you know, the different levels we felt it had to break moving forward. And it did all that. It broke the downtrend line. It broke this 39.76. It broke the 50-day. And then we said, well, there's really no reason it doesn't test 4,100. And sure enough, it did. And Friday, it was pretty much a gap and go. It filled right up to it and is now closed well above previous support. So we're at 41.42, and the previous resistance was 4,100. So new highs on the NASDAQ, and you know, you can see here, it's pretty amazing the more we look at this linear regression channel, how well it's actually acted as some support. The fact that we pushed down below, came back and closed right on that second standard deviation line, and then from there it was just all full steam ahead, and we're right back to the center line, which is the mean reversion. So, you know, again, different things to, you know, we try and keep it very simple here. I don't look at crossovers or MACD or histograms or anything like that. It's really just simple price action, and the fact that this linear regression channel pretty much to the T on all of the indices stopped the move downward is really quite amazing. So I definitely think that's a good tool to keep an eye on moving forward. But again, you know, NASDAQ new highs, and really, you know, no resistance ahead. So who knows where it goes. The Dow, similar situation. All right, the high from the middle of September was 17,279, and we closed 11 points above that. Again, we closed above that downtrend line. The 50-day moving average in this 1829 area is one I thought we were going to hit some resistance on, but you could see what happened instead was we continued, pushed right through, and then sure enough reversed back and found support right at that 50-day line. Now, the other thing I want to point out to you guys is the fact that you could see these lows for each candle is progressively higher. All right, we've never put in a low that's closed below the previous low. So be interested to see. That would be the first sign of at least a pause or a move back to some type of support range, would be a close below the previous candle. But that hasn't happened yet, and you can see what's happening again on the Dow futures on the weekly chart. Came right into that second standard deviation move. This is a 2-year weekly chart, and now we're actually right back at new highs and pretty much right at the mean reversion. And the Russell futures, once again, pretty much came right into that second standard deviation move. Move this drawing and move higher back towards the mean reversion. Now with this one, I definitely thought we were going to see at least some type of resistance at this downtrend line. That did not happen. Instead, it's rallied right through, and it's actually pushing to new highs, or testing new highs, I should say. This one did not break to new highs. You can see here, the middle of September, the high here was 1181.6, and we were well below that. So this would be the area I'd be looking for some resistance right here at 1172. Whether this moves sideways or reverts back to this uptrend line, maybe that's what happens, and we revert back to here, to this 11,390, where the 50-day moving average appears to be rolling over and starting to curl higher, or we either move sideways and let that 50-day moving average kind of catch up. But again, pretty much a fake out to the downside. Now we're almost to new highs, or at least a higher high on the Russell. But as I've said before, one pattern that I was looking at was an inverse head and shoulders, where we came down. Here's a low, you came up, put in a lower low, and then came up again and come back down and put in a higher low, and that would be an inverse head and shoulders, where you would have a shoulder, a head, another shoulder, and then you'd be waiting for a break of the neckline, which would be right here around 1172. That is a reversal signal. So the fact is, if we zoom out here a little bit more on the Russell, let's go to a 4-year weekly chart. You can see what's happened in the past is it's consolidated, and then look at the move it's had out of that consolidation, and again, it's consolidated. So now I'm expecting at some point us to get that move like we've had in the past out of this consolidation. Now whether that consolidates a little bit longer or not, that remains to be seen. But for right now, this looks like it may be starting on this next leg higher. And you can see what happened in the last time is it pretty much consolidated for almost a whole year and then rallied for a year. Now it's consolidated for pretty much a whole year, and then it looks like it may be ready to rally. Who knows if it's for another year? That remains to be seen. But right now, the price action is leading us to believe that new highs, or at least higher highs, are in our future. So that's how the markets are shaping up. So again, really no reason to be bearish here, in my opinion. If you have been, you've been wrong, plain and simple. I know we took a few short trades at one point, but we quickly reversed that. That's why I always said, we wanted to take profits at targets, keep stops very tight on those shorts, because I wasn't fully convinced that down was the way we were going. I'm much more comfortable building long-term positions to the upside as opposed to the downside, and we took very quick trades to the downside just to kind of generate some capital. But for right now, you could see we're going ahead, and we've built our portfolio of 14 positions. We'll go over those in a minute, and we'll pretty much looking for outperformance to the upside, growth, and dividends. All right, so let's take a look at our positions now. All right, so our first position is Apple, and again, we're going to go through these very quickly. Not a lot of commentary. The only thing we can really look at is potentially moving a stop up, but based on how quick and how far we've come, a lot of the stops are going to be very difficult to move at this point. But you can see here, Apple 108 new highs, closed nicely on Friday. All right, you can see it's just pretty much moved higher. The only day that we put in a lower low was right here on Thursday, and then Friday we gapped higher and moved higher. So $95 is still our stop on Apple, and that's really all we can do at this point. There's really no place to move your stop to. ACE, okay, nice breakout. Friday we ended up closing a little bit lower than where we opened, but again, really no area to move stop to yet. There's 103.87 is a potential, but at that point we're really not using any type of current price action. We're going all the way back to the beginning of October. I'd rather see us make a higher low and then move our stop to there. So for right now, 101 remains the stop. CB, this one just continues to move higher, and again, $90.50 is our stop, but I don't see another area where we would be able to move stop to. There's no area of support. The closest thing would be here at 97.28, but that's a long way away. Look at where the 50-day moving average is. So this one I feel like needs to maybe put in some consolidation for a little bit. We're getting up into that overbought range, so we want to be cognizant of that, but we also want to make sure that we're staying long the trend as long as it's trending higher. So for right now, some consolidation probably would be a good thing for CB. Costco, you could see it moved well out of this secondary consolidation, and now it's at new highs. All right, 122.07 was where we moved our stop to. And this little setup here is kind of similar to what I'm looking for. I mean, the longer that it would have consolidated, the better off I would have felt, and the more confident I would have felt in that level of 128.50. But the fact is, we're moving the new highs. I think this maybe needs a little time to rest, let that 50-day moving average catch up, and then we'll see where we go from there. Home Depot was unchanged Friday, but you could see again, rallied straight through support. Very little signs of, rallied straight through resistance. Very little signs of support up in this area, right? So this one we're probably waiting for a higher low to form, and then that'll be our next target for trailing our stop higher. Kroger was up 1.18, and again, gapped higher out of this small consolidation. All right, next stop level on this one is a little bit different. We could probably at some point this coming week move up to 51. All right, I would say 51 is probably a good area. That would be a combination of these three lows plus the high back from the middle of July. But for right now, we kind of closed towards the lower end of the range on Friday, so I wouldn't be surprised to see this, at least in the first couple days of the week, maybe pull back or move sideways to work off the large gap that took place. But again, right now $50 is our stop, and hopefully we'll be able to move that stop up this week. L Brands, you could see gapped higher, ended up closing lower on the day by 1 penny, but nonetheless a red candle. This could be a potential reversal. All right, so if you're looking to take profits at some level or whatever, just be aware of that. For right now though, 63.36 is our stop. Next stop level is going to be this 65.29. Let's see what happens if we can consolidate or at least test and move higher from this 68 level. Then we'll be able to move to that 65.29. But for right now, I'm perfectly happy with 63.36, and just be aware that this one has earnings coming out in the middle of November. Lockheed Martin, all right, this one, look at the rally it's had from 170 to 190, all right. So again, not very many areas of support that you can use. The only thing you have going here is look at the consecutive higher lows that it's made. All right, it's closed above the previous low every day since this reversal signal here. So if you're a short-term trader, I would be using a close below 189.56 as your stop. If not, and you're long-term like us, then 170.03. And when I say that, just so you guys know, I do trade options that I don't share with you guys right now. Eventually, the plan is to incorporate them in our trading, but this is not one that I'm long. I tried to get long this. I couldn't get my fill price, but I am long Apple and ACE and CB. They're all long all call options, and I am using the previous day's closing low, so close below the previous day's low as an exit point. So that's just another way that you can incorporate not only being a longer term trader, because that's my preference more than anything else, but a way to get some outperformance day in and day out. So when I see stocks that are breaking out, I'll take a position, and if we start getting a move like this where we could put in progressively higher progressively higher lows, then I'll be using the low, and that'll be an exit for my call positions, and I'll continue to be long the stock. So it's just another way to gain a little additional performance with little capital input. Nike's another one that I am long. All right, I'm long some call options. I got long same time that we got long the stock. All right, so I'm actually up nicely on the stock, but you can see how the lower I don't know how to say this the right way. These lows are moving higher, I guess is the best way to say it. All right, so right now I like this little 3-day pattern here, and I'm using a close of 91.26. So basically I'll get out of break even if that was the case. But if we're long the stock like we are, and then 83.75 is a perfectly good stop level. All right, so there's ways to be long for the long term, and there's ways to be long in the short term. All right, if you want to be long Pepsi, we're long obviously with a stop for our stock at $90. But if you wanted to be long call options on this little small breakout here that you got on the 30th, then you could very easily use this 93.70 level as your stop. All right, you're risking about $1 or $2 to the downside for a short-term pop, and maybe you get to the point where you bring in a few $100s on a call option. That helps your stock position. But for right now in Pepsi, we're long the stock. Our stop on the stock is $90. If you're doing anything else, that's on your own. And like I said, we'll try and cover that at some point, just as another form of income. I have an options account, I have a stock account, and I trade them differently. 2 different time frames, 2 different sets of rules. So for right now, keep it simple. We're just considering stock. But again, $90 is your stop on Pepsi. Ross Stores, similar to L Brands, gapped higher, closed lower on the day. But again, we're all the way down here, 72.21. I would say if that would have held this little breakout, we would have probably moved to 74.18. But if not, I want to see us move sideways to this trend line and the 50-day moving average, break out higher, and then we'll be moving our stop to 74.18. SPG, all right, another nice little move higher out of this consolidation, this couple-day consolidation that it had. Let's actually remove that. But you can see here again, if you wanted to trade options on this, you had this 3 days, and then you got the breakout. So you could take that entry and put a stop here at 174. If you're trading stock, stops all the way down here, 162. So again, 2 different time frames, 2 different sets of risk, 2 different ways to look at things. But again, 162 is a good stop level. And really, the only other spot that I would see us being able to move to right now would be 164.12. But that's kind of a moot point at this point. I'd like to just see where we go from here. We just entered the position. And the last one, Travelers, stop down here, 91. Again, not another good area to move stop to. If you look at this, we've had, again, lows are continually moving higher. We had a little bit of a breakout from this 3-day pattern on Friday. Ended up closing lower on the day, though. So, could be a small little hiccup. Maybe it wants to move back and get back into this a little bit of a range here. But weekly chart looks really good with that move out of the weekly consolidation. Again, you could see us coming into those overbought conditions. So looks like maybe a move higher or some consolidation would be warranted here in Travelers. Now, as far as our watch list goes for this week, I mentioned in the tweets and the beginning of this video, not too much set up for us. So we'll go through those real quick. I'm not crazy about really any of these. Not setting up exactly how I'd want, but I put them on here just to give us something to look at for the week and see how it performs. But we'll see what happens. The only one that I actually kind of like is KSU, and we'll get to that in a minute. But Ball Corp, this was on our list. We didn't take the position because we had earnings. Sure enough, it broke out right before. And then I guess with earnings and some selling, it came right back into the middle of the range. So right now we'd be looking for a move over 68 as our entry. And, again, 61.78 or potentially even 63.30 would be the stop. CME, this was one that looks like it potentially broke out. I don't know why my things are coming up red now, but let's remove these two. All right, so there's your support and consolidation. I'm sorry, your support, your resistance, your consolidation is down here. So again, if we had a little bit of a higher move out of this box, you could set your stop here at 77.89. This is a financial stock, so I think we are almost filled on financials, but nonetheless, good looking position. You could see on the weekly chart, similar to the cup and handle pattern that we've been seeing. You can see where it came down and in, moved sideways, and now it looks like it's breaking out. But for right now, you're still waiting for that breakout over 83. So call it 84. CenturyLink tried to break out on Friday, couldn't do it. But again, earnings coming up, so most likely not a trade there this week. Actually, no, earnings are for that one. I'm sorry, earnings are on the 3rd. That's actually Monday. DFS, kind of sloppy, but you could see here, if we get that break back over 65.74, we'll probably use either 60.43 or 62.39. Most likely 60.43 as our entry point. As our stop. KSU, this is the one I talked about that I liked. You could see we had this on our list at some point, but what I'm looking at is a consolidation, just a little bit of a longer consolidation than originally thought, where we came up, tested. All right, so now it looks like we're getting ready to break out. Couple tails up here, so I want to wait for a breakout, probably over the 124 area, close above that level, and then we would use something right around here at 111. So now we're starting to get into the point where the stop is pretty far away. Again, that's kind of why this week's watch list, there's a couple different reasons why. And there's not a lot. One, the stops just seem, the way the lows have played out, and you can see something like Travelers and everything like that, that we've broken down to new lows. That would have to be your current stop level, and then we've broken out to new highs. So the spread between them is a little bit more than the 10% that I like to maximize out at. That's the first reason. Second reason is a lot of stocks have broken out already. The ones that have broken out have run, very similar to a lot of our positions, Costco, Travelers, LMT. So not a lot that's actually in a consolidation. So for right now, that's why our list is small, and that's fine, because the fact is we took the positions when we were alerted to them. We did our work, and now we want to get to the point where we don't want to take every position. We just want to take the best ones. So these 10, I feel, were the best ones that were out there this week. Are they ones that I feel like I need to buy? I don't know. It depends what happens during the week, how they actually break out. But you can see here, Lilly, another one, right now is consolidating in this range. And that range is between 67 and 62. All right, so again, I'd rather see these consolidations be a little bit tighter. You can see here, if we break out over 61, stop would be 62. It's just about that 10% range that we're trying to max out at. Another one like Mason, you can see here, this one's been in a bit of a longer term consolidation. So let's see what happens. But again, breakout over 52, stop will be 46.50. RSG, this was one that was on our list that we got stopped out of. Sure enough, it looked like it broke out, but we didn't take it because it had earnings. Earnings came in. I don't know if they came in bad, but sure enough, the stock sold off. And now we're right back into that consolidation that we were in. So still waiting. I would say right now it's probably a breakout over, let's call it $40. So if it goes over 40, closes above 40, then that would be a good point to get in. And the last one on our list for this week, VF Corp. You can see it broke out on Friday, but ended up closing lower. This one is a discretionary stock. I put it on the list for those who aren't in a lot of discretionary already. We are. We probably could fit one more, but I don't know if it would necessarily be VF Corp. Again, you would need now a close over 68. Stop would be 62, $6, just about that 10% range. So a lot of stocks, the range between support and resistance is a little bit too much for me. A lot of stocks have broken out already. So this week will probably be a light week on taking some trades, but that's fine because we have 14 positions. We're not looking, again, to maximize our margin. So we'll be content with the 14 positions, and we'll leave it at that. But for right now, that's how we're going to leave the portfolio, and we're going to take a look at potentially adding new positions. But right now, it's more about managing the positions we have. So that's it for today, guys. really not much to do coming up. Just kind of stay along those positions, let them work, and we'll revisit it again next week. But catch us on Monday for the strategy session. And be sure to follow me, StockTwits, Twitter, Google+. Subscribe to the YouTube channel and follow me on, and subscribe to the nightly recap. Have a great rest of the weekend. We'll see you Monday.